guess as Max said, I've built companies in Ukraine. I've founded one recently now in Poland. I have a company in San Francisco, so I've kind of done the Silicon Valley thing, but also kind of adventuring off the end of the earth. Not going to talk about that, no. So what I'm here to talk about is a company that I actually did not found. It's a company that I joined the management team of 5 years into the business. And it's a company that we sold to Google, and it was in Ukraine. So why did it work? Well, I think that the interesting thing about Vudel, so it was the largest venture-backed exit of a company, of a startup in Ukraine, which, I mean, it's Ukraine, so it's relatively small still. And I think that what's interesting is the company was founded by Ukrainians, and you'll hear me say the word Ukraine a lot in this, but that'll be okay. The company was founded by Ukrainians. It was the first time technology had been licensed out of a university in Ukraine. So actually this came out of a research lab. They were building face recognition technology. So the company came out of a research lab. Eventually, some new management was brought in, actually a couple times, but in the end, the company sold to Google for $45 million. And I guess before that, we raised about $18 million in venture capital, which there are companies that have raised more now in Ukraine, but at the time also was the largest raise that had happened in Ukraine at that point. Okay, so why did it work? Yeah. So the interesting thing about face recognition is that I can kind of say that we were making face recognition software, and I think everybody knows what that means. So it's not very complicated. Of course, the execution of making that work is pretty complicated, but the concept itself is pretty universal. At the time, there were a number of other companies that were doing the same thing. So I think you'll hear people talk about, well, you know, if there's no competition for your business, no competition for your startup idea, then you should probably just, you know, try to find something where there is. In any case, there are really, really few times in the history of the world where no one else was thinking of the same thing at the same time, and it was also at the same time a good idea. So with that in mind, there was actually an pretty active M&A market. So this was a company that was created out of a university at a time when companies like Google and Facebook were buying companies that were in this business and buying teams that were working on this kind of technology. The company also had some pretty dedicated venture capitalists, one in particular. So I think the company did initially raise funding from local angels, well, actually Ukrainian diaspora. So Ukrainians living in the US that invested in a company in Ukraine. But anyway, they eventually have brought in American venture capital. And there was one VC in particular who would not let the deal die. Right, so the company was going to sell. And actually, that's the kind of guy or girl that you want on your side when somebody gives you money. That even if you don't want to sell the company anymore, that they're going to make sure that they actually have a company that trades, that they want every investment to exit. So I think that was something that also really helped. Of course, there were a few generations of management that were brought into this company, so it's not one of those stories where there were a couple guys and they founded a company and they really scaled with the company all the way through to the exit. So that didn't happen in this case. And oftentimes when there is technology in, I guess what might be an emerging market like Ukraine, right? So the technology might be really good, but let's say the structure of business education is not quite as good as the technology might be. So you'll have some founders that might be able to do the deal to get the tech out of the university. So some guys that might be able to scale it a little bit. But when it comes time to really growing a business and selling it, in any business you can always find this balance of bringing in people who have done it before, right? So you might be really good at building a product. You might be really good at solving a problem, but you might not have experience selling a company or raising venture capital. And I think that this is one of those cases where there was a good balance that was brought in of technology and experienced entrepreneurs that came in and helped get the deal done. And the other part of this is that the company, while it started in Ukraine, eventually opened an office in San Francisco, or in Palo Alto in Silicon Valley, and also in South America. And so when we were talking about the company wasn't a company that was based in Ukraine. It was a company that had started out of a university in Ukraine, come to Palo Alto, opened a mobile development center in South America, and we really presented ourselves as a global company. And what that helped to do was de-risk the negative perception of the geography. Now, not everywhere that I'll tell this story has like a negative perception of geography, but if we look now, Ukraine in the news has even more of a negative perception of sort of risk, let's say, than it did at the time Vital started as a company. So this is really perceptual de-risking because there were, let's say, 6 of us anyway there in Palo Alto and like 80 people in Ukraine. So I mean, if you're actually having someone invest, they're going to know. They're going to know that there's mostly the people are in Ukraine. But you always have this way of saying, well, we can always bring it here. We have operations in a way that we can balance the risk. So anyway, how can you do it? So there are definitely a lot of ways that you could do this. Here's one. Yeah. So Vital, not actually a big exit by Silicon Valley standards. This is 5 minutes on TechCrunch, and 10 minutes later, no longer on TechCrunch, and 2 hours later, nobody knew who we were, and I'm pretty sure nobody knew who we were before that, right? So I think that though when you go to Ukraine, it's the data point for a venture-backed company. It still is, and I think that one thing that I really hope is that another company will sell. But we'll talk a little bit about how you have to establish data points in a market. So anyway. Focus establishing these incremental data points. And what I mean by that is if there hasn't been a $1 billion exit in your market, the thing that will help your ecosystem grow more is probably, let's say, finding something that that you can work on that you could find an exit for. Something that you can work on with a team that you can take across the finish line. And I mean, this is all subjective, right? So I mean, what I think I might be able to do or you think you might be able to do, might not actually work, but anyways, worth a shot. Yeah. So if the objective is to build, start, fund, sell, yes, a company in a market without a history of venture-backed exits, here's a model to do that. Yeah. So the first thing is pick a problem that's universal. And what I mean by that is you don't try to build like a social or consumer internet or business software application for like a global audience. A really good example of this is I had a company once that came and said, we are going to solve the problem of small business procurement in the United States. I said, well, that sounds interesting. So you were in the US and you had some experience with procurement and you saw the problem? No, but we hear there's a really big problem in the US with procurement. So don't do that. In general, try to take some outside capital that has some experience that's exited. So it can be a challenge in a market without exits to find an investor that's had exits. So I see how that can be a problem, right? So you might not be able to do that, but if you can, at some stage, try to bring on a financial partner that has actually taken a deal across the finish line. So it's okay to have angels that are like, okay, yes, we want to give you money, and that's good, and you probably want to take it, so okay, fine. But at some point, you have to bring some adults into the business. Speaking of bringing adults into the business, so in a market without a history of exits, I would advocate bringing in, it doesn't necessarily mean a CEO, but bringing in, if you can, a little bit later, after you've got some traction, after things are kind of working, but bring in some executives, or at least one, that's not a founder that's had an exit. And that can be tough, but keep in mind if you take outside capital, and you take it from professional investors that have had an exit before, and you haven't had an exit before, and you're in a market that hasn't had exits before, you're probably going to find yourself having to take some other executive into your business anyway. So better to do it while you can participate in the process than be on the sidelines. So anyway, establish a global footprint. That was on there too, yes. So universal problem spaces. I think that there are a lot of kind of spaces where you can say, okay, it doesn't matter where I am, where I live in the world. Everybody has this problem. I think a really obvious example of something like that is like antivirus. I'm not suggesting anybody starts an antivirus company, but I think that it doesn't matter where you live. Like everybody understands that computers get viruses. It doesn't matter if you're rich or poor, if you live in anywhere in the world, any kind of computer, anybody is going to have at some point a little bit less on Macs, we know, but everybody has a problem like that, and it's a problem that anybody could solve if they wanted to. And I think that's why you see companies like, let's say, Kaspersky in Russia have done well, right? I mean, if you look at something like Skype for communication, it's consumer internet, I probably wouldn't recommend it, but chat's like a really obvious concept, right? I wouldn't go building Snapchat because I think something like that really only comes out of Los Angeles. But when you think about these kind of concepts, right? One that's really interesting for me is hardcore tech. So algorithm, math-based technology that you can build really anywhere. It takes smart people, and you can put a business around it. If you build something that is really good, that solves a really hard problem with hardcore technology, you can kind of commoditize the business that you have to build around it, right? So that's a function that can be built around that really could bring either outside help, but you have something that works really well, solves a problem that everybody understands. So back to not building Snapchat. Yeah, most companies in Silicon Valley solve first world problems. So I think Snapchat's a really good example, right? Those are problems that we should just like kind of in general leave for people in California to solve, because they're not really problems that most people have. And I think that when we look outside of those markets and we see companies that try to build solutions like this, it's not really a solution, right? But in any case, and what problem is it solving? I don't know, but when we see companies try to build these solutions, they usually fail. And again, this is just my own subjective experience. Don't create consumer internet or business software companies outside of Western markets unless you're going to serve like a local market. So it's fine if you understand the business. I'll give you a really good example. I have a company that I've invested in Poland, and we have to use like some Polish accounting software, and there's 5 different companies that just make the accounting software for Poland, and we tried to use SAP and NetSuite, and it was a nightmare. So there's an example. But, Poland's not the biggest country in the world. Of course, you could build a business like that, but you end up building a lifestyle business. It's not like a business where you're going to scale the Polish tax law across Europe or the world. Yes. So anyway, work with experienced investors. So, I think that something that's really important, again, is just having people that are on your side, whether they're angels or whatever money you end up raising, that are really there just to get the deal done, that are not, particularly in a market where you haven't had a lot of exits, that are not just going to give you the money and come back to you like in 3 or 5 years and wait for you to exit. So I think you want people that are more hands-on. You want every bit of experience that you can add to the process. And I think that at some point you want to try to bring in foreign capital if your goal is to have like a global company with a global exit. If you have trouble doing that, you might want to think about whether or not you really created a problem, or rather, you really are creating a solution to a problem that has a global audience. So back to this part, and this part can be a little controversial. I'm not advocating like CEOs stepping aside, but I think that you either scale with the company or you don't. I think that it really helps to have someone that has actually sold a company, as opposed to like everybody sitting in a room going, okay, so it's a term sheet. What do we do with this, right? And the thing is, at the end of the day, companies are sold. They're not bought. So you're not going to be sitting somewhere. It almost never happens that you build something and like somebody goes, that's really cool. We'd like to buy you. It happens few and far in between. More often what happens is you raise some money and you've got a company and you're thinking like, okay, so, you know, we need to provide some return to our investors. And it's been like 5 or 6 years and the investors are kind of like, okay, you know, what's going on here? We'd like to try to find some liquidity, maybe a little bit down the line. Anyway, at some point you're going to have to try to do this, right? And if things are, let's say, and if you're not Google or Facebook, you probably, anyway, they got help, right? So these are again, these ways, this is kind of this system that I'm proposing of, let's say, I would say base hits, which is an American baseball reference, so it probably isn't going to apply, right? Yeah, so about establishing a global footprint, this is again about balancing this perceptual kind of like, this perception of where the company is based. And again, you know, maybe this is a good thing, maybe it's a bad thing, maybe you do it, maybe you don't. So this is just one way that happens to work. It's one way when we see companies, not just in my experience in Ukraine and Poland, but when we see companies all across emerging markets, you know, they build something, they've got a good solution, it works, and then they at least open a sales office or something somewhere else, right? I think that the key to that is, you know, there may be things that you do really well at home, you know, in your main office where you've started your business, but there may be things that you can outsource to other countries. And it's interesting if you think about a Ukrainian company outsourcing executive management to, you know, guys in Silicon Valley, but essentially that's what they did. And I think that you know, it's a different way to look at it, because so often companies start and they outsource some business function, which is often engineering or accounting or just something like this. But you know, it is possible, not necessarily to outsource, but to turn that model on its head and say, okay, well, this is the part that we do really well. Let's get some other people involved, you know, because let's say we're really good engineers, we know how to build something, and it's a really great solution. You know, let's get the equivalent of executive management that can help us with that after some certain point. So, you know, depending on the market, it's not all about de-risking. You know, in the end, it is about exiting, right? So, yep. Beatles geographic distribution. Okay, so a little bit about this. This is kind of what it looked like in 2011. So most of the company was in Ukraine, with just a few people in Palo Alto and a few people in South America. And when the company sold, there were actually just 2 people in Palo Alto. So, you know, we really were a Ukrainian company that was outsourcing management, right? And this is a model, and it is a model that worked. So that might be what it looked like. It's a little small. But if you took this kind of as a process into a diagram, you know, if you took this through some steps of let's find some universal problem. Okay, we found a universal problem. Let's see if anybody will give us money. You get a little money. Okay, let's see if we can take this to the next level. Let's get some traction. If that works, fantastic. Let's see if we can raise some foreign capital. If we can't raise foreign capital, maybe we should start over. You know, and this is just a way to approach it. You know, if you go beyond that, let's see if we can bring in some non-founder execs, some people that have sold a company before. And if you can't do that, you might think about like, really, why can't we do that? I mean, because if you follow this process, you know, look, just one way to do it. But if you follow the process, you have so many different validation points that are external, right? Because you don't have, in a market without a lot of exits, you don't have a lot of ways to do, let's say, some internal market validation for a global solution. So I think at each one of these steps, you're ending up connecting with the outside world. You're connecting in a way that you can kind of get the experience from other people, and even if the experience of trying to bring, let's say, a non-founder executive that sold a company into your business doesn't work, you could probably learn something about what you're doing and why maybe it will or won't work from that. So, yep. Again, a lot of ways to do this. This is just one. It happened to work. When you see other companies that are doing something similar in markets where there aren't a lot of exits so far, we see companies doing something very similar. I see companies doing something very similar. Yeah, so that's it, and I'd be happy to answer any questions.
Thank you, Jonathan. We don't have a lot of time for questions, but we might have for one. So, we've got a gentleman over here.
Thank you very much, and thank you for the presentation. Quick question: were the initial founders fired or demoted or something? Because
I wasn't there for that.
So they were.
I don't know.
A question for me, Jonathan. What is? I know you're.
They didn't own a lot of the company when it sold.
Okay. You're doing something new, like 2 new companies right now, as far as I know, and again in Ukraine and in Poland.
Yes.
So
some of the business now is in Ukraine. Although with the Ukrainian business, we are pretty much just saying we're based in San Francisco.
Okay.
Given with the way that things are right now, and with the small team that we have, that's all PhDs. I've got guys that are in Kiev, but I have guys with all American visas. So in the process of working, in the time that they have for me, we've got American visas for all of them, and as quickly as the sky might fall, they could hopefully get on an airplane.
Exactly.
And so again, this is like about de-risking, right? So
but generally, those benefits that attracted you to Ukraine in the beginning, they still exist in a way.
Yeah, they absolutely still exist. They absolutely still exist.
Okay, thank you very much, Jonathan. One more hand for Jonathan, please. Thanks.